Good morning, everyone, and welcome to our webinar. My name is Nisha. I am one of the marketing reps here at AIM. Today's webinar will be recorded and later posted on our website. This does mean all attendees will be automatically muted so that we can get a good quality recording this morning. If you have any questions, please feel free to type them into the chat box and we will try to answer them throughout the presentation. But if we are unable to get to the question, we will have a member of our marketing team reach out to you individually to make sure we get those answered. We do have a webinar every Tuesday morning at 9 a.m. Pacific, so keep an eye out on your email or our website to get signed up for the next one, which will be May 21st, and they will be talking about short-term care's faculty portfolio. With that being said, I'm going to hand it over to Don Erickson and Bridget Collins so that we can get started this morning. Take it away.
Thank you, Nisha. Good morning, everyone. Hope everyone is doing well today. Bright and sunny here in Yakima. Hope it is where you as well. Don Erickson, as always, here at AIM. With us today, we have a very special guest again from OneAmerica, Bridget Collins, the Regional Account Director. Today, we're actually going to be going over OneAmerica's hybrids, the opportunities, solutions, more popular and more in demand than ever before. There's some extra special things we're going to talk about, and we're going to talk about how we have some new features that you guys can actually get help with from an external and internal side of OneAmerica. With that, good morning, Bridget. How are you today?
Good morning, Don. I'm doing great. Thank you so much for having me on. I really appreciate it. So what I wanted to do, yeah, no, this is exciting, actually. For those on the line, I was talking with Don a little bit earlier. You know, I always like to look in review to kind of get an idea of not only what did you and your colleagues in the field sell with OneAmerica last year, but more importantly, what consumers bought. I think that's important for us to kind of take a pulse check on what that data tells us, and certainly to outline and give us a roadmap of where I think there's a tremendous amount of opportunity, likely just things that maybe we've forgotten, didn't know, don't have as comfortable of a knowledge base on. So I'm going to go over, the data from last year, kind of talk about the resources, as Don mentioned, to help you get to that level of expertise that you're comfortable with, and talking about our solutions and really utilizing all of the resources that we have available for you. And namely, those are in our regional sales directors, and I'll explain that role as we get there. But let me go ahead and dive in for you here with what we took a look at last year. So from a total sales perspective, last year in 2023, our results, not surprising to me, but just so that you're aware, we have the two platforms that we have our asset-based long-term care solutions live, if you will. Our asset care, which is our whole life-based policy, generally with the continuation of benefits rider, the long-term care rider. And then we have our annuity care, which is our annuity-based platform that can be combined with the continuation of benefits rider, the long-term care rider. So not surprising to me, but just for edification for everybody on the call here, 88% of our total sales in 2023 landed in the asset care, the whole life-based policy solution. Within that solution, there's some variables on funding, so I'll go over those in just a little bit, but contrast that with 12% on the annuity care platform. Also variables within the solutions there, and I'll go through those, but 88% asset care, 12% annuity care. If we were going to talk about sort of the why that might be, I mean, it could be all over the place. I think sometimes, it should be comfort level, and whether it's whole life insurance versus annuities, looking for the demographic or the client that would fall into either category. And we can talk about that a little bit as well, but total sales, 88% asset care, 12% annuity care. If we dive a little bit deeper into the asset care sales results, the whole life-based policy sales results, 59% of the policies sold last year were recurring premium. So this is going to be inclusive of a continuous pay premium that's paid to 95 in all states except California. California's paid to 100 because it's a little bit on an older chassis. I call that sort of lifetime pay, if you will. It's also inclusive of any of our limited pay options which we have 20 pay, 10 pay, and 5 pay. So those are all sort of in that 59% recurring premium option. That's where the majority of the asset care solutions were sold. That's then followed by what I want to call was originally sort of the flagship in the hybrid space, which is not just with OneAmerica, but any of the hybrid carriers. When most of the solutions originally came out, they were single premium solution only. That was the only sort of funding option available back when these first originated. So from a flagship hybrid standpoint, a lot of, I think, advisors, producers, and even consumers that have some familiarity with hybrid solutions, they might still think in terms of that it's a single premium only, and it either is going to be a good fit for me or not, because some people don't have the ability to do a single premium option. I think with education and time, we're seeing that people are understanding that there are a lot more options out there that are available to them. And this statistic tells you 27% of the sales in the asset care solution portfolio were single premium. So that flagship, I would tell you probably, I don't know, maybe now 8 to 10 years ago, those numbers were different. The majority of sales were single premium, and then followed by recurring premium. So not surprising that the numbers have switched into what we're seeing today. The recurring premium solutions, the limited pays and the pay to 100s and pay to 95, those allow for the most flexibility to consumers and being able to pay for, especially if it's a cash play, to pay for premiums. So just know that people that is resonating with consumers. Again, with that 59% total number there. And then the 14% represents the qualified solution. So 14% of the asset care solution was funded with qualified money. In California, Asset Care 3, outside of California, we call that the annuity funded whole life. There's a way that we go about sort of funding an asset care solution with qualified money. Please don't think that takes away any tax implications. They're still there. There's nothing that we can do about that. There's nothing that anybody could do about that, but we're pretty creative in how we spread that out and allow somebody to use existing qualified funds to fund for a long-term care solution, which is a great way to talk about the different options that are available. I will tell you in conversation, what oftentimes happens is that an advisor or producer will lead in with, if they know their clients and they've done some of the background and they sort of know where the money lives, as I like to call it. When they know that there's qualified funds available, that's a good conversation starter, but a lot of times it ends up transitioning into a recurring premium option that they move forward with because they want to leave their qualified funds intact. But obviously for 14% of consumers, that was the best option. And I can tell you those tend to be higher premium amounts. I don't have that data with me, but just in general from what I've seen, because it's more transactional, it's just sort of moving money from one pocket to the other. But 14% of the asset care sales fell into the qualified arena. If I break that down for you, if you look on the left-hand side of the screen, it'll show you 56% were single life, 44% were joint. Now, this was a little bit of an eyebrow raise, right? Because we talk a lot about, OneAmerica in particular, talks a lot about our joint life second to die policy structure. It almost is from a pricing perspective, not quite, but pretty close to a 2-for-1 when it comes to the pricing of that. If we dive deeper into these statistics, this is conjecture on my part, but I think I'm pretty spot on. Why the single life might be now, it is greater than the joint life, is when we have couples that are applying for coverage and one of them is getting declined. The other is taking the policy, which is fantastic and a real reversal from what we've seen historically in the industry. In the past, generally speaking, when clients or consumers applied for coverage and one of them was declined, the other, more often than not, didn't take the policy. We could argue all day long from our perspective why that person probably needed the insurance more than anybody else, but that's just generally what happened. We're seeing that trend change, and I think that's a large part of the number here. Also, though, is that, OneAmerica, because we talk a lot about that joint life second to die policy structure, we kind of became the joint carrier, but we are just as competitive and have options for single life. And so I think that that's also sticking here into this statistic, but just to kind of let you know the breakdown. On that single life, the gender split, for what it's worth, was 34% male, 66% female. I don't, if it's the males that are getting declined and the females are getting issued the policies, and they're the ones that are keeping it, that's certainly probably part of it. Single females, understanding that they want coverage in place for themselves and all of that goes along with that. But that's the gender split for you to kind of be aware of. Average issue ages for us with asset care was between the ages of 60 and 64. Not surprising. I mean, in the long-term care space, in the traditional side, it's a little bit younger. It's generally, I think it's still about 58 years old, but 60 to 64 average issue age. I always like to stop and pause on this one, just because I don't want anyone to think in terms of, well, I'm only going to target my 60 to 64-year-olds for the long-term care planning conversation. While those are the average age buyers, I really want to emphasize that every client you have the opportunity to be in front of is one that you should have the planning conversation with. Don't let the averages on the issue age guide you as far as who you should be talking to. I think you should be talking to everybody. This was just to give you an idea of, just by the numbers where it landed last year. But I always like to pause on that one because everybody needs to be having this planning conversation. And I can even tell you just really quickly I'm having a lot of success right now. I'm seeing a lot of producers having success talking to their 40-something-year-olds, not only for themselves, but the 40-something-year-olds are encountering issues with their parents now, some of them, understanding that they want to do something for themselves because they're living a long-term care event with elder family members. Also, if they have healthy family members and they understand sort of the avenues that they're heading into, and the healthy family members don't have long-term care in place, maybe don't have the means to put long-term care insurance in place, my 40-something-year-olds are paying the premium for their parents because they understand that without an insurance policy in place, they are the insurance policy. So again, I just like to pause on the average issue ages because I think it's important to kind of unpack that a little bit and sort of understand where the opportunities are and who we should be talking to, which is everybody, because everybody's got a story once you dive into it. And then the last,
sorry,
yeah, go
Bridget.
ahead, Don.
No,
go ahead.
sorry, just come in, but you hit the nail on the head with it. If you're healthy, if you're in your 40s, if you see family members that have had health issues, or you have seen anyone, I mean, it opens the eyes to everyone that, you need some kind of care. You're going to down the road with age. Dealing with it firsthand, mother-in-law. I mean, she was diagnosed with Alzheimer's last October, and it's one of those things that you just don't know when it's going to happen, who it's going to happen to. But if you can get healthier people that are in their 40s, or even if they have you're their care. If their parents don't have any long-term care at all, we know it firsthand. My wife's actually being a very big, I'd say, caretaker for her mom. And so she did that with her dad too, same kind of thing. And we've told them over the years, just like, we need to make sure you get some care. And so these ages, the average age is 60 to 64, that could be where a lot of it is. But you have different age bands for the different products you have too with the asset care. And you guys can go a little older also with the annuity, correct?
Yes, we can. And when we go into the annuity breakdown, you'll see that even the average issue age on the annuity care solutions is automatically older because of that, and obviously some other reasons for the annuity care suite. But yeah,
just want to throw that in. So yeah, definitely.
Yeah, no, for sure. It's good discussion points. But the last thing that I wanted to pull out for you with the asset care portfolio is 57% were lifetime benefits. Now, again, if we talk about this, OneAmerica is the only asset-based carrier to offer lifetime or unlimited benefits. There's only one other carrier in the long-term care space that offers lifetime benefits, and that's on the traditional side, and that's NGL. So, and I'm a proponent for lifetime benefits. I also, I lost my dad last year, but we had a long battle with dementia. So I understand those types of situations that go well beyond what any statistical average length of stay or claim will tell you. When you live it, it's a whole other situation. But 57% of our asset care solutions sold lifetime benefits. So while this is a soapbox of mine and an advantage that OneAmerica offers that's unique in the marketplace, we still are, issuing a lot of business that are limited benefits, that are less than lifetime benefits. So I always think it's important to let your clients know what the options are that are available to them that are out there, because they don't know, and they might not even be able to understand what lifetime benefits means as far as how to quantify what does that mean. But when you start talking through them, and maybe lifetime, maybe that's not what they are, for whatever reason, that's not what, appeals to them. So now we've got, a lot of policies that are being issued that are something less with a limited benefit duration, whether that's a base only or a limited benefit base and rider. I was a little surprised at that number. Well, I was probably surprised last year when I saw it. It's about the same as last year, but it's gradually sort of gone down. For a long time, our lifetime benefits was a very, very high percentage portion of the business. But it's just to let all of you know on the line that we have a lot of options. We are not a one-trick pony at OneAmerica when it comes to what we offer. And that is resonating with clients as well, all of the different options and the ways that they can put a plan design together. So we take that and we move into the annuity care results. I'm going to show you that 46% of our annuity care solutions fell in our indexed annuity care option, which arguably has sort of the most options available from a selection standpoint within indexed annuity care. 39% of the annuity care suite was annuity care 2, which is our packaged annuity care option. So let me compare and contrast just for a second. With indexed annuity care, you can do a base only, or you can do the base and the rider. There's different ways to construct that. With annuity care 2, it is automatically packaged with a base and rider platform. So from that perspective, there's no moving parts. It is what it is. You fund it, and our annuity care solutions today are single premium only. So there's no option. So it's a one and done, has a base and a rider. We can't do lifetime benefits on annuity care 2. You can do that on indexed annuity care. Don't want to spend a lot of time sort of confusing you of all of the different things that we can have, but just sort of understanding the breakdown. And then annuity care 1 is at 15%. So that's the breakdown of the annuity care suite. And then you can see on the left-hand side sort of what that looked like. 65% single life, 35% joint. Not surprised here. This is also a joint life second to die policy structure, but the majority of our annuity care sales do come in, at least today, via 1035 exchange. Sometimes that it has to be like for like, but we do have an eligible insured, all kinds of different ways. But I think this sometimes appeals to more single life. And if you look down a little bit before I get there at the average issue ages, that might tell you why. Because if you've got an older demographic who's purchasing annuity care, they a lot of times have lost a spouse, have lost a partner, and so they're looking for alternatives for themselves today. But just so you see the single life, joint life breakdown on the annuity care sales results. And then as far as that single life gender split, 28% male, 72% female. So 72% female purchasing annuity care solutions. That kind of, I think, is telling the story a little bit about sort of whether they're, whether they're single or they have an uninsurable spouse. A lot of times there's that too, as far as the joint life, single life split, but just that you can see what was sold and to whom it was sold to. And yeah, that average issue age for annuity care ages 70 to 74. I think there's a lot of different reasons for this. One, when you're looking from a 1035 exchange standpoint, you're looking for somebody that's got an annuity, older annuities, out of surrender, looking for, actually not out of surrender, that's different, but older annuities on the books, looking to maybe do something with, and it wasn't something that they were going to be reliant on for income. that automatically tends to push the age bracket a little bit older. Also from an underwriting standpoint, so our annuity care suite is not guaranteed issue. However, does not have the same sort of robust underwriting that our asset care whole life suite does. So a base-only annuity care is the 5 knockout questions, the traditional knockout questions for long-term care. If you can get through those, policies issued. If you're going to add the rider, the continuation of benefits rider, there is a phone interview largely to go through to determine any sort of cognitive impairment. The phone interview is pretty robust, but the phone interview and then policy would be, or a decision would be made. So 5 knockout questions and then an interview with the continuation of benefits rider. That's kind of how the annuity care suite works. So if you're working with the client that might be a little bit older, that can fund an annuity care option, but does have some health issues that might prevent them from getting an asset care, being underwritten for asset care, annuity care would be a good viable solution. Most importantly, because you're going from tax deferred in their annuity that it exists today to tax free for long-term care by moving it over this way. So it's a good alternative to being able to provide tax-free long-term care benefits through the annuity and funding it that way for somebody that might be a little bit older who has a little bit of health issues. Hot off the presses, and I'll send out a reminder probably later this week, is that we are right now it almost is guaranteed issue on a base-only annuity care plan right now. Not quite, we still have the 5 questions, but it's instant decision. So if you have clients that are interested in looking at a base-only annuity care, and we're going all the way up to $1 million with full commission paid, which is huge. So base-only annuity care up to $1 million, full commission paid. If you have instant decision, if your clients can get through the 5 questions, we can have that turned around for you in about 24 to 48 hours. So it's awesome. We just announced that. We just implemented the triggers internally to be able to do that, meaning behind the scenes, we had automatic requirements being ordered, for example, that was just sort of built into our systems work. We're depending on what the solution was and all that kind of stuff. There were script checks, MIB checks, that kind of thing. We've been able to turn those off in our system. So it is truly 5 questions, base only, policy issued. So that's a fantastic opportunity to kind of generate those conversations. Again, I'll send out some more details, Don, so that you can share that with this group and your, the rest of your distribution about the details on how that's working. But great opportunity there. And then to look at that last statistic, 85% are issued with the continuation of benefits rider. So contrary to what I just said about this great opportunity with base only, which is awesome, last year, 85% of people who purchased an annuity care option wanted to have the continuation of benefits rider included. Not terribly surprised there, but just so that we can see what those results were. So, with this data, I always like to share it. I think that it helps guide you with what was sold, where there's opportunity for some options, maybe some things that you hadn't talked about before with the clients that you're talking to. But I think the breakdown just sort of helps kind of, provide a roadmap on, sort of what we know is really working and where we think there might be opportunities just to have conversations about some of the different options that are out there and that are available. So I'm going to then switch into here to talking about, sort of the sales tools and resources that we have available for you and highlighting that regional sales director role for you. So as Dawn mentioned at the top, I'm a regional account director. So from an account director standpoint, I work with the agencies like AIM and many others, and I work from the agency, and I'm responsible for the entire distribution that agency supports. So all of you on the line, any other distribution that agency has. Simultaneously, we have regional sales directors across the country. We've got 18 sales directors across the country, and the sales directors are regionalized. And the sales directors, they're responsible for the end producer, for all of you on the line, no matter no matter who you write your business through, for example. Although they are aware, for example, for you guys, that you write your business through AIM. But these regional sales directors can really help you in the one-to-one. So they can guide you through, maybe you're not as comfortable or familiar with some of the solutions that I just outlined for you on what was sold last year, and you'd like to learn a little bit more, and you want to have it sort of more directive to exactly what it is that you want to focus on. That's where the regional sales directors can come into play. The regional sales directors can also do client meetings. In fact, I was just coordinating with one of my other sales directors in Texas, and he's doing a consumer event for a producer that is contracted through an agency that I support. So he's doing 2 consumer meetings, a lunch and a dinner, and they're prepared to take applications on site. So things like that, whatever sort of one-to-one training, support, questions, if you have those regional sales directors are at your disposal. They are there to help you in partnership with your agency. So for you guys in partnership with AIM, everything that you do filters back through AIM, and AIM and I, Dawn and I will be in contact if you're working with one of our sales directors, just so that we know, what's happening and what those conversations look like. But they are there for you. And the most recent addition to the sales director team is Nick McCormick. Now, Nick might be a name that maybe some of you are familiar with. Nick was an internal sales partner at OneAmerica for many years. I know that he was the backup. He backed up my internal partner, Fox, whenever Fox was out of the office. Nick is fantastic, and Nick has taken the Pacific Northwest role. So he's covering the state of Washington, Oregon. He's in Idaho, Montana, and Wyoming. And Nick is actually, I was going to have him join our call today, but he's literally in the process of moving up to Washington. So I think he landed in Issaquah, Dawn, just so that you know. I know He was looking in Renton for a little bit, but he is going to be in Issaquah, and Nick is ready to roll. So where Nick is going to be a product expert inside out and backwards. So if you have case designs, unique case design questions or plans or things you want to put together, you want to do a client event, any of those things, Nick would be available for anybody that's in the Pacific Northwest. And if you're outside of the Pacific Northwest, believe you me, I've got a sales director that can do the same thing. So I'll highlight that for you in just a second, but also wanted to mention we have a new plan for care piece, and we have a client profile that I want to encourage everybody, most importantly, the plan for care piece. If you haven't had an opportunity to take a look at that, I'm going to show you where you can access it through this digital sales room. It's a great piece to get your clients thinking in terms of, without long-term care insurance, sort of what assets do I want to tap into to pay for a long-term care event. Large in part, what we're finding, this plan for care piece that we just launched at the beginning of this year, when you put that in front of a client to fill out sort of the homework that you give them, maybe before your meeting with them, they start talking about, hey, I don't really want to use my assets to pay for an extended care event. Is there an option? What it kind of guides them and helps guide you down that conversation of, well, we can put that asset to better use, likely by putting it into a long-term care solution. Anyway, fantastic piece. And the client profile piece can just be used to help you identify the clients that you maybe want to speak to next. I have everything loaded into this digital sales room. Sorry about that. So let me show you. Let me open this up. I tested this link earlier to make sure that it worked for you. Everybody has access to this digital sales solutions room, sales room. I created this. So I created this. I curated all of the data and information that's on here. So I'm going to scroll down for you so that you can see what this looks like. I have videos for you that are consumer approved that you can use in client meetings. I've got different sales ideas and marketing resources for you. I'll highlight this tap the professionals piece because it goes back to the sales director role in just a second. But there's some articles out here that you can use or share with your clients, some different sales ideas. I've got having the conversation pieces out here. I've got some Alzheimer's stuff, our step-by-step guide. The plan for care piece is right here followed by the client profile piece. Again, if you are not familiar with this, you haven't seen it before, I will make sure that Don has the link that he can send out to you. I encourage you to take a look at it, bookmark the link. It's a live link, and so what I'm trying to do fairly consistently is add different information into it so that it stays relevant and is refreshed and gives you the things that that we find, that my partner Fox and I find are the most asked for types of pieces. Our claims data information here. If you haven't seen our claims experience infographic, I encourage you to take a look at that. For the first time in our company's history, we pulled back the curtain on sort of where the claims live, what's been paid, who they've been paid to, why they've been paid, how much has been paid. I think there's a lot of misinformation out there from a consumer standpoint about insurance companies in general, but most specifically long-term care insurance companies. We're in the business of paying claims. It's what we do. It's what we want to do. It's what we strive to do. And that kind of gives you a breakdown of what's been done. And you can also share that with your clients. You know, if your clients are interested in what happens at claim time, this Care Benefit Concierge video is brand new. And that's also something that you can share with your clients about the benefits and services, if you will, that OneAmerica provides at claim time. I've got some process guides, pre-qualification information for you, some advanced strategies. I hope that you find this beneficial. I'm always looking for feedback on the data that's here, or what you'd like to see and what's working for you. But again, that plan for care piece and that client profile I mentioned here, along with everything else. And let me quickly open up the tapping into the long-term care professional sheet. I mentioned that Nick McCormick is the sales director in the Pacific Northwest. If you are not in the Pacific Northwest, or even if you are and you want Nick's contact information, the best way to get it is to scan this QR code. It will open up the map for you and show you who all of the regional sales directors are, and give you their contact information. Again, I'll follow up with Don. Don, I'll follow up with you to give you this piece in particular, so you don't have to extract it in the QR code with Nick's information. But this does reiterate sort of what those sales directors can do, how they can do it, how they're there to support you. And if you never want to use them, that's okay too. If you just want to stick with AIM and with Don and with me and with Fox, it's up to you. We just want to make sure that you know what's out there and available for you. And these guys really are, guys and gals are really fantastic folks. But just lots of resources that are available for you. And this is how you get to them. So with that, I know I don't know if I had extra coffee this morning or what, Don, but I was just going on a roll. And I tend to do that when I'm really excited about the information and what we're talking about. I'm excited about this digital solutions room or digital sales room that we have available for you guys. So with that, I don't know if there was any questions or anything you wanted me to elaborate more on. I'm happy to do it, whatever you think.
There wasn't any question, but the people were like, wow, and this is, great detail and great available materials, especially with having Nick available. He's in Issaquah. My brother actually lives in Issaquah. So, I mean, it's before you even get into Seattle. So, I mean, if he can do Oregon, Idaho, all those different states, we have agents in all of those. And just for them to be able to reach out to him and be able to set stuff up to, if they have questions or any concerns. I know Nick personally. I mean, I worked with him for a long time, even before Fox came on. I tell you what, he has knowledge that, I mean, you guys have questions with clients all the time. You know, there can be questions that you just don't understand, or if you're confused with all the details of some of the products. Nick and Bridget and Fox, all of you guys are, I mean, you know your stuff. It's all about that. But yeah, they're just saying they want this material and to get it to them. So we'll reach out to everybody after the webinar and let them know all the information that we can. So, but yeah, good stuff.
Perfect. Yeah, that's great. Thank you so much. I really appreciate everybody jumping on. I know it's, you probably, overloaded with virtual meetings still, but I mean, when we can bring content that I think is valuable, I'm always happy to have, as many folks on as we have and be able to talk through it. So it's exciting stuff. It's exciting times, because the need is, I was literally, the news this morning was, there was another highlight on Bruce Willis's wife talking about his dementia diagnosis and her as a caregiver needing help and trying to find a community to support her and her family. And it's just, those are conversations that we need to have, and we're the lucky ones that get to be able to do it and educate the folks that we're talking to about what it means to have a long-term care plan in place and what it means if you don't, and being able to help guide them with making informed decisions about what they want to do, to save themselves and their families and from all of the heartache that accompanies all of it, right? So I'm excited to continue to bring the information to you guys. So I hope this helped, and I'm excited to see where we go.
Well, 100%. All of this helps, especially about that new thing that's coming out. I want to get more information on that so we can get it out to the field for sure. So.
Yep, absolutely. I will definitely put some stuff together for you. And immediately I'll put all of this for you so that you can get that out, and then I'll follow up with an update on the base-only annuity care solution.
Perfect.
All right. Well, that's all I had.
No, that was, that's a lot. I mean, there's a lot of detail there, and there's, I know when we reach out to people, they're going to have more questions about, Nick and everything, and about the tools you have. And this live site, I like this. There's a lot of great information there. What we'll want to do, everyone, when you're on and listening to this, we always make sure you are in compliance, contracting. When we call you, if you're interested in that, make sure we get you up to speed with it. But Bridget, great webinar this morning. Great detail. Appreciate you coming on. Want to make sure everybody has a great day today. With that, we'll end it. We'll close it up, and have a great day, everyone.
All right. Thanks
Bridget.